Tesla is down another 3% today, and I am currently down about $80,000 on my Tesla calls. And in this video, we're going to go over my plans for my positions. I'm still holding December 2025 and 2026 calls. We're going to talk about what I'm planning to do with those, where I think Tesla is heading next, and how I honestly messed up pretty bad here. For those of you who are catching up, we were bullish on this because price was pulling back into the weekly market bias back here on February 10th through February 17th. You'll notice that since we broke above this back here in July, every time price pulls back into this market bias, we normally bounce. Now, there are times where price will pull under the market bias and then fully recover. We've seen this not only on Tesla, but Nvidia, the S&P 500, many other things. So sometimes this level just doesn't hold to perfection. Now, as price was pulling back into that weekly market bias around $330, at the time, we saw price on the daily chart bounce and close with higher lows on the BX trender. This normally indicates a short-term bottom, and my thought process here and what normally happens is that if we take a Fibonacci retracement from swing high to that swing low, before selling off once again, price will minimally bounce up into that smart money zone, which would have been from low to high a 20% move. And the plan was from there to see if price would push through this resistance and we would have what's called a break of structure. That would confirm a potential push to $500 within the next 3 to 4 months. Now, this only works about 55 to 60% of the time, but the risk versus reward in these situations is off the charts, especially when we're trading at these deep discounted ranges. Now, one of the areas in which things just went south, and I did mess up here, was not cutting 2 days ago. You see, our initial plan was enter when we bounced off that $330 level. So when price is going to find a bottom, we are normally going to bounce, pull back to make a higher low, and then shoot for that previous high. You'll see here on the 21st of February, price was still at the time holding higher lows, trading right here at $337. Now, with all of my trading strategies, no matter what it is, whether it's even on a 5-minute or a 15-minute on a daily, it doesn't matter. I only trade candle closure. This way we know that we're only trading with confirmed information. And more importantly, this helps us a lot when it comes to stop hunts and during breakouts to actually get a bigger return. This is important because then on the next day, price sells off and closes not at a lower low. See, our stop loss and our plan to get out of this was if price closed at a lower low. This would have been, for us, hopeful around $320. We were planning, best case $320, realistically maybe $314. And that would have only been about a 7% loss if we were trading just shares. And the issue is that when we opened up the next day on the 25th, price was still sitting at $327. Price began to sell off drastically. I mean, the first hour of that session on the 25th was the majority of that sell-off. And so we had to wait until the end of the day. And now this is where I come in and mess this up. It's not the fact that we lost this trade. We don't care about losing. This year to date, we have a 55% win rate. Over the past 2 years, we have a 63% win rate. I don't give a shit about losing. But where I messed up was that I didn't just close it. And the reason that I didn't close it is because I thought to myself, and here's the thing, this was rational. And what I was telling myself was definitely true. But sticking to your plan is more important. I said to myself that we've already given up this massive sell-off that we really did not want to be a part of. And at the time, price is trading at $306. If we zoom back out and pop on that market bias, you'll notice that that's just below the weekly market bias. And my thought was that at the end of this week, if market makers bounce this thing and drive price all the way back up to $325 and we end up holding the market bias, I'm going to feel like an idiot because I've already given up the bulk of the losses. I've already given up the bulk of the decay because if we don't bounce here by the end of the week, then we're not going to hold the position. And so I felt that it would have been silly because I've already paid most of the risk and most of the losses. And price continued to sell off basically another 8.5%. And this brings us to where we are right now. This weekly market bias is still green, and there is a chance that price somehow bounces in the next couple of days and week to reclaim $306. And what I should have done was just said that if that happens, we'll just get right back in the trade. It's not the end of the world. But where we are now, I'm going to hold minimum until the end of tomorrow's session in case we get a bounce. I'm not averaging down from a risk management standpoint. We're down $85,000 and we've made 1.7 million on Tesla alone in the past 2 years. So it's not like we're risking anything drastic. We are going to be giving some profits back, but it's not going to be that crazy. And I still would have taken this trade each and every single time. So I'm not upset about the loss. What I am upset about is just not sticking to my strategy. I do think there's a good chance that we bounce between $270 and about $265, but my fear is that we're just going to push back into this bias and reject one more time. With how much we've sold off, and if we truly break this market bias, I don't really see a world in which we don't come back to that $250 and $260 support level that we talked about as our worst case scenario multiple weeks ago. Now, my 2026 calls, I'm not worried about at all, but the 2025 ones, I am more so worried about. Now, with all of that said, I still believe that if Tesla comes back down to 250, that will hold. I have pretty high certainty there, about 70 to 80%. I think that that is going to hold because one, it's extremely discounted range. Two, it's the point of control on the volume profile, which is this red line, basically the institutional buy and sell level. It acts as a significant resistance when we're trading below it and acts as a significant support as we're coming up on it. So I think that there's a massive chance that we're going to see Tesla back up at $500 probably within the next 6 months. So if you're somebody who's holding shares long term, you've got nothing to worry about unless Tesla does break $250. If Tesla breaks $250 and then breaks this level, this $220 level, then we have some shit. Because that is a break of structure. And instead of making higher highs and higher lows as we are doing, it would be just like back here in 2022 when price stopped making higher highs and higher lows and instead began to make lower highs and lower lows, which is not something that we want. If you guys want access to all of my indicators and learn our step-by-step trading program, go ahead and check out our free courses. I highly recommend starting with the Elite Traders Playbook. It's going to teach you those indicators and give you our exact entry and exit requirements in order to take a trade. If you want access to all our real-time trade alerts, all of our trading bots, custom indicators, and live stream with us each and every single week, you can join our Discord community. The link is in the description.